People were just paying. I think because inventory was compressed, investors were still really hungry. We had a lot of out-of-state investors that were coming in. Sometimes we call that ignorant money or dumb money, but people were just paying, and it took a period of time to kind of weed a lot of those folks out, where they were realizing that, okay, wait, I'm spending too much. I'm not getting the cash flow that I need, and it makes sense. And interest rates were low, but when interest rates started to rise, it started to make those cash flow numbers shrink. And so that was a big deterrent, I think, for that period of COVID, and even into some parts of now. We're starting to see a little bit of that backing off now. Interest rates are starting to pull back a little bit. But as far as properties and still finding properties, they're there. Every market has deals. You just have to know where to look for them. You have to kind of get more off of the market and actually go deeper, getting into it's really relationships, dealing with agents, building those relationships so you can kind of get deals before they go on the market. You can also get into there's not as many foreclosures right now. We're just in a period where there's not a lot of foreclosures. During pre-COVID, when everybody refinanced, got into those low 2 to 4% rates, it's harder for them to move out of that property now because
There's nowhere to go.
There's nowhere to go. They can't replace what they're currently in with something new. So that's kind of been another one of the catalysts, like everybody knows, is what's kind of caught inventories lower. But there are still opportunities, and if you're in this game, it's not it's a consistency battle. So you just consistently stay in front of your network, stay in front of the people that can either provide you with properties, or you use different marketing channels to uncover those leads and kind of ride through the storm.
Yeah.